Hello and welcome. You have tuned into Market Cafe right here on ET Now. I'm Shrishti Sharma and this is the show where in the next 1 hour we're going to be telling you all the top stories from the globe and across for the Indian markets as well that you should be tracking for today's trading action, and it's going to be yet again an interesting day. So let's get started, and firstly let's get you the global checks. With respect to the US market, it was a day of decline coming in, where Nasdaq, S&P 500, all the major indices were seen to be declining with almost a 400 points of cut coming in for Dow Jones. In some of the macro data, it was the US October jobs data that has seen a surge and the cuts have run. So that's not a great macro data, and along with that there was renewed pressure on some of these techs and the AI related counters. Look at the fall in stock like AMD that declined almost 7.5%. Other than that, some of these other counters like Nvidia, Microsoft, and even for a matter Tesla were seen to be sinking in trade just yesterday. There were some of the other headlines that we have been tracking with respect to Tesla specifically, because there was that news flow and the concerns around the Elon Musk $1 trillion package, and that has received the shareholder approval. So that's another big story that we are tracking at this point in time. But when it comes to the Japanese share market, we have seen a decent move coming in over there. Other than that, the Japanese market did erase the gains from the previous session's lows, and the BOE is seen to be holding the rates at 4%. So that's about the global checks. When it comes to the US markets, we'll touch on the Asian markets in detail. But before that, let's also give you what's happening with respect to the gold and the crude oil prices. Gold prices have seen a bit of a surge. It's now trading above that 4,000 per ounce mark, while for Brent oil prices, nothing much happening there. The prices are a bit steady, and that's a second weekly decline if we track the whole week movement that we are getting to see on the crude oil prices. So definitely decent action over there, while for the dollar index, that is seen to be hovering around that 100-odd mark. So that's a bit of a concern when it comes to the emerging markets. So that's about the global checks, but let's also tell you which are the other global stories that we are tracking at this hour. And first up, the FAA says that it's cutting the flights nationwide as the government shutdown drags past a month, the longest in the US history. With air traffic controllers unpaid since the 1st of October, operations will shrink by about 10%, or 3,500 to 4,000 flights a day. Now, major hubs like Atlanta, Chicago, Dallas, Los Angeles, and NYC are expected to feel the pinch first. And in the month of October, that actually saw over 150,000 job cuts, up more than 4 times in September, the worst October since 2003, and the toughest layoff year since 2009. And that's according to the survey by Challenger, wherein tech firms led the way with more than 33,000 cuts, nearly 6 times the September total, as companies restructure around the AI integration. And yes, of course, it's Tesla. Tesla shareholders have approved a $1 trillion pay package for Elon Musk, the largest in the corporate history, with over 75% support at the Austin factory meeting. Musk celebrated on stage with dancing robots, calling it a whole new book for Tesla's future. We are morphing Tesla into an AI and robotics powerhouse, said Musk. And let's shift focus to Nvidia then, because Nvidia CEO Jensen Huang sparked a buzz after reportedly telling the Financial Times that China is going to win the AI race. Hours later, he softened the stance, saying the US must race ahead. Now, insisting America remains just nanoseconds ahead of China, Huang contrasted China's energy subsidies with Western overregulation. And 85 years old Nancy Pelosi says that she is retiring from Congress after nearly 40 years, ending a career that shattered ceilings and shaped U.S. politics. Now, the first female Speaker of the House, Pelosi led the passage of Obama's Affordable Care Act and famously sparred with Trump, who called her departure a great thing for America. And in some of the other headlines, it's Eli Lilly and Novo Nordisk have struck the deal with Trump administration to slash the prices for their blockbuster weight loss drug Zepbound and Wegovy. And in return, they'll get a 3-year tariff grace period on pharmaceuticals imports and broader Medicare access, including the coverage for overweight patients with prediabetes. And Donald Trump hailed the move as a big win for the cost for the living. Let's go across and listen
in. I'm thrilled to announce that the two world's largest pharmaceutical manufacturers, Eli Lilly and Novo Nordisk, have agreed to offer their most popular GLP-1 weight loss drug. I call it the fat drug, remember? At drastic discounts. They're very effective drugs. And so far, I've never heard anything bad about them. I only hear good about them. It's pretty. Is there anything bad about them, Bobby? I don't know. I haven't heard anything bad. Someday, maybe it'll come out.
All right, let's move on to another story then, when the Trump also reacted to the comments from the Supreme Court judges who raised the doubts over the legality of his tariffs. He said that his tariffs were bringing great benefit for the U.S. economy and he will continue to strike deals with other nations.
So much evolves around tariffs as a defensive mechanism for our country, as national security for our country. So I don't want to really discuss ground two. This is so important. If you look at China, and I covered this yesterday, but if you look at China, by putting a large 100% tariff over and above the tariffs they already paid, they came to the table, they talked, we made a wonderful deal for everybody.
And during the same press conference, Trump said that the trade talks with Prime Minister Narendra Modi are going good, praising the Indian leader as a great man and a friend. Trump noted that India has largely stopped buying oil from Russia, adding that Modi wants me to go there.
Going good. He stopped buying oil from Russia.
When you plan
and he's a friend of mine, and we speak, and he wants me to go there. We'll figure that out. I'll go. I had a great trip there with Prime Minister Modi. He's a great man. And I'll be going.
Planning to go to India next year, sir?
It could be, yeah.
Let's get back home then, and let's shift focus to the political developments, because Bihar elections are underway and the high-stakes first phase of Bihar election concluded with highest ever voter turnout of 65% and rather peacefully, barring the incident of an attack on Deputy CM convoy. Now, it was an important phase for both the ruling NDA and the Indie bloc, with several key leaders including RJD Patriarch Lalu Yadav's son Tejaswi and Tej Pratap, Deputy CM Samrat Chaudhary and Vijay Kumar Sinha, and several ministers in the frame. Now, with the first phase over, the political parties have shifted focus to the crucial second phase, which would be concluded on November 11th. Results are set to be declared on 14th of this particular month. But we also caught up with the experts to decode the highest ever voter turnout. Let's listen into what they had to say.
One is the Nitish Kumar factor, which brought back memories of a Belgian prime minister when I was first visiting Belgium, that he headed about 7 or 8 coalitions where the parties under him kept changing, but he remained the prime minister. Now, Nitish Kumar is in that sweet spot where if I won't rule out even a hung assembly in which Nitish might end up getting support from some of the minor parties which are now part of the Mahagadbandhan. So, and I've seen that in Indian politics, parliamentary politics in general, and Bihar in particular, reasons are invented later and after the power equations are formed. So that is one thing I want to mention. As far as the SIR is concerned, let me tell you very bluntly that the ghost is not going to go away. Apart from the fact that Bengal and Tamil Nadu are still getting started on their special intensive revision of electoral rolls, the Bihar, the deletion of 6.5 million voters is absolutely no joke.
First, there is no conclusive evidence published by any researcher which claims that higher polling percentage results in either anti-incumbency or pro-incumbency. So this entire question is moot, carries no significance, no meaning. Second, a lot of bogus voters have been deleted because of the SIR exercise, which will also result in having more bona fide voters, genuine voters who would go out and actually poll. So this is another reason why the voting percentage has gone up.
All right, have an Asia check right now because Asian markets are seen to be mirroring the kind of declines that we have seen in the US markets, especially for the likes of Nikkei, which is down almost 2% right now. Hang Seng trading with a cuts of almost 0.5%, while Shanghai too is trading with a bit of a negative bias. And other than that, even the South Korea's cost piece is down almost 1.3% as we speak right now, and especially the sharper cuts is what we are getting to see in Kospi as well as Nikkei 225, given the fact that both of these indices have seen a surge anywhere between 30 to 60% on a YTD basis. Just day before yesterday, we have seen a bit of a sell-off happening. And even today, now that the US markets are seen to be reversing for a bit, these indices are also trading lower. And once again, we are seeing a bit of a cut happening. And so is the case for GIFT Nifty as well, which is indicating an implied open with a cut of 130 odd mark. Briefly, Nifty did slip below that 25,500 levels as well on the spot basis just yesterday. And as of now, though GIFT Nifty is indicating 25,513 levels on the GIFT Nifty implied open, but that's with a cut of 114 odd points as we speak right now. So let's see how Indian markets pan out for today's trading action. But a day of weakness it has been for the markets just yesterday. But a lot of these individual movers were buzzing on the back of the results. So let me take it across to my colleague Snehi, who is joining us with a market wrap.
Well, yes, another somber expiry and another tepid day of trade coming in for the market. For you had the Nifty that did not even manage to hold on that 25,550 mark and closed slightly below that. A 0.3% cut over there. Similar cut coming in on the sensex. The advanced decline ratio was very steeply in the favor of the declines, and that is what had spooked the breadth of the market as well. Other than that, if you take a look at the select gainers on the Nifty 50 side, despite the kind of cool off that we've seen in the markets, you had Asian Paints that continued to hold on to stellar gains of about 4.5% over there. Reliance, M&M, Wipro, Ultratech Cement, all of them contributed to the little bit of support shown on the Nifty. On the flip side, deep pressure on the Nifty coming in from Grasim, lower by more than 6%. Hindalco was lower by 5.5%. Adani Enterprises, Power Grid, Eternal, Eicher Motors, these were some of the top Nifty losers. On the flip side, if you take a look at the sectoral gainers and losers, IT and auto managed to end absolutely on the flat line. But on the flip side, the big losses on the street were led by Nifty Metal, lower by about 2% on an intraday basis. Nifty Realty, Energy, PSU Banks, Nifty Bank, Pharma and FMCG. So if you take a look at some select names on the losing side, it was made up of names like Netweb Tech, lower by about 9.5%. Delivery that saw its biggest fall in quite some time, 8.5% lower over there. BEML, Blue Jet, ABFRL, Blue Star, all of these stocks were big losers. Surprising coming in for Blue Star that saw a gap up open but closed about 6% lower. On the flip side, names like Reddington were up 16%, International Gemological Institute up 10%, CCL Products, Bajaj Holding, Astral, Paytm, all of these stocks did well. So that is how the trade was, mixture of trade coming in, but the favored largely in favor towards the declines, and that is what kept the market under deep pressure.
All right, thank you so much, Snehi, for getting us all those details. But let's, Snehi, also tell us which are the cues that one should be watching out for.
Well, yes, lots of cues to watch out for in the trading sessions to come. If you take a look at the important macroeconomic indicator back home, it's going to be Forex reserves to track. Globally, from the US, you have University of Michigan consumer sentiment that will be out. From China, you'll have trade data and forex reserves, and from Japan, you'll have household spending numbers that will be out. In terms of global earnings, keep a very close eye on names like Mitsubishi Heavy Industries, Honda, KKR, Brookfield, as well as Macquarie. But shifting focus back home, you'll have a bunch of Nifty companies, 3 to be particular, that will be coming out with their earnings. That's Trent, Bajaj Auto and Hindalco. But even from the broader end of the market, you'll have names like Gujarat Gas, Kalyan Jewellers, Chola Financial, Petronet LNG, Uno Minda, Nykaa will be out tomorrow. Viatech were back, Go Fashion, Aditya Vision, and a whole host of other stocks, so watch out for all of them. In terms of corporate action and board meetings, all eyes are going to be on the stock of Swiggy, because the board is going to be meeting to mull that 10,000 crore rupee fundraise via QIP that they had announced during their Q2 earnings last week. And also Aadhar Housing Finance will be in focus because other than its earnings, the board is also going to be mulling of fundraising. So watch out for any announcement along those lines. But in terms of the primary market, you will have yet another listing. Studs Accessories IPO will be making its G-Street debut, so watch out for that. Lastly, in terms of some other events and important commentaries to track, New York Fed President John Williams is going to be speaking at an event, so watch out for his commentary, along with Fed Chair, Vice Chair Philip Jefferson, who's also going to be talking. So watch out for all of these commentaries, earnings, stock reactions, as well as all of these cues to track.
Thank you so much, Snehi, for getting us all those details. But with this, let's also tell you which are some of the stocks that you should be watching out for in today's trading session. And firstly, let me take it across to Ashesha, who is standing by with a list of counters. Good morning, Ashesha. Take it away.
Well, yes, good morning. And first up, let's talk about Bharti Airtel. And this is on the back of a block deal which is expected to happen today. In fact, Singtel is looking to sell about 1.8% stake in the company. And the block deal is likely to be valued at about 10,300 crore. The floor price for this is at about 2,030 rupees per share, implying over 3% discount as compared to yesterday's closing price. So on account of this block deal, which is expected to happen, keep an eye out on Bharti Airtel today. Meanwhile, a whole host of companies have reported their numbers. First up, Lupin from the pharmaceutical space. This one has reported very strong set of numbers. North America sales have been better than expected, and that drove earnings beat in the quarter gone by. North America sales rose by about 46% on a year-on-year basis. India sales, meanwhile, up 3%, and other regions have also reported a growth of a solid 24% on a year-on-year basis. So across the board, very strong set of numbers. Lupin is likely to see positive reaction in trade today. Apollo Hospitals, meanwhile, from the Nifty 50 pack, reported its numbers yesterday, and yet again, a better than expected set of numbers. HCL's revenue grew by about 10% YOY. And growth was soft on account of higher base, but despite that, if you look at the numbers as compared to estimates, it was clearly better than what the street was working with. Meanwhile, two stocks in focus on the back of new order wins that have come through. First up, RVNL, where the company has won orders worth about 270 crore. This is from Central Railway. And the second is Welspun Enterprises. They've won orders worth about 3,145 odd crores. This is from Bryn Mumbai Municipal Corporation, and the total order book size now stands at about 16,330 odd crores. So Welspun Enterprise in focus on the back of this 3,145 crore order that they've won.
All right, thank you so much, Ashesha, for getting us all those details. But with this, let's also tell you which are the other counters that you should be watching out for. And first up is United Spirits, because as their parent Diageo has actually gone ahead and cut their guidance for the full year of 2026. And that's on the back of a weaker volumes that they have been reporting in China as well as the US markets, wherein Diageo has said that they now expect 2026 sales to be flat or slightly lower, with only low to mid single digit operating profit growth, because earlier they have forecasted annual sales performance similar to last year, wherein the sales did grow almost 2% along with mid single digit operating profit growth in 2026. Diageo actually fell 6.5%. Let's see on their Indian subsidiary what sort of an impact we get to see. Other than that, in some of the earnings, it was LIC that did come out with a very strong operational set, when this time around LIC's number, the VNB margins were up almost 145 basis points on a YY basis. There's sustained focus on the product mix, realignment, and strong sub-segment margins have actually maintained the numbers of the company, and the management commentary remains upbeat. Along with that, all eyes will be on Cummins as well. Very strong set of numbers. The numbers were way better than what the street was penciling in. Look at the jump in their margins. It's a 264 basis points of an uptick that we have seen over there, while the revenues have surged almost 44% on a YY basis. AkzoNobel from the paint counter will be in focus. There's a lot of action indeed, but AkzoNobel did come out with a weak set of numbers, when this time around the margins are down, the revenue is down 15% on a YY basis. So let's watch out for that. And lastly, Triveni Engineering will be in focus. The consolidated revenue has been at 2,014 crores versus the consensus estimate of close to 1,649 crores. So better than expected numbers, and so is the EBITDA performance as well. Very strong operational numbers coming in from Triveni Engineering. So let's watch out for this counter as well. But moving on to some of the other news flow then, and it's raining IPOs on the street, where India's second largest pure play solar module manufacturer, MV Photovoltaic Power, is all set to launch its issue next week on 11th. Sajit Mangat caught up with the management on their growth roadmap. Here's an excerpt.
We are the about 18 years old company, which we started the solar module manufacturing in 2007 onwards, where the India is not even know the solar goals or anything. So our journey started from 2007 to till date, and we have done multiple expansions in the phased manner as the demand grows in Western Europe as well as in India. That is how our growth also has taken place, and we are able to do the expansion by our all internal source or the whatever the normal debt we have taken from the term loans from the banks. So this is what how is then. In the fresh issues, what we are going to raise the money, which is going to be utilized 1,600 crores approximately to the repayment of the term loans, which is the present outstandings, and remaining is going to be used for the corpus fund, sir.
Mrs. Suhag, can you give us a sense of what is the kind of current gross debt that you have, and once this debt is paid off, the borrowings which have been paid off, what will be the kind of debt position after that?
Sure, sir. Sir, before that, like just adding on to the story of MV, right? So we are like as you introduced, we are the second largest module and cell manufacturer, so integrated manufacturer today, and with the strength of being having one of the first TopCon cell manufacturing facilities in India, and we are strongly positioned in this market as a high quality manufacturer and a preferred vendor for the largest and key IPPs of this country. So currently with the capacities that we have of 7.8 gigawatt of module capacity and 2.9 gigawatt of cell capacity, which is TopCon, that I would emphasize, and with that current level we have a debt on the balance sheet of 1621 long-term debt, which will be fully paid off from the issue, sir.
Mr. Manjunath, you're in an industry where technology changes very fast. The cell chemistry changes very fast there. What is the kind of expansion or upgradation strategy that you have here?
Thank you, sir. Very valued question. So we see the history of MV is we have started the manufacturing in 2007 onwards. So 2007 to this time, there are a lot of changes in the technological one. If you start with say that 2 bus bars with mono, then it went to the poly, then it went to the further mono, then once again it went to the monofacial, now it is going to be the bifacial, now the latest one is going to be TopCon technology. So MV has seen all the journeys from this time, and we could able to produce all type of these technologies of the product and able to succeed very well in the market, and the people who are using our manufacturing product, they are well satisfied. That's how our warranty claims are very, very nominal. So that is shows the quality of the product, which is also in the RHP. So the present technology, that is what, sir, if you see that we are the one of the major TopCon technology adoption in the latest technology, which has been producing about 2.94 gigawatt of the cells, and also modules is completely TopCon, which is presently whatever capacity we are having, completely producing the TopCon technology, and completely we are watching the whatever the latest technology is going to be there, will be in that path, sir.
Your top customer by revenue accounts for nearly 36% of your revenue, and top 5 accounts for nearly 86%. There's a high client concentration that you have. Do you have long-term agreements with these clients?
So, sir, if you have seen the kinds of customers that we have cater to, that they are very high, large developers who install panels in a very large scale in large projects, right? So we have seen, like, MV has contributed more than 1 gigawatt of modules to the Kavda development that is happening, as an example. So this is a typical mix that you would see for someone who is a highly quality player that is focused on key account markets in this country. And what happens in MV is, if you have seen our customer retention, right? This is basically year-on-year customer retention. It doesn't mean that they are customers that we are losing who are not part of that 30% that we have. They basically come back into the order book at a time when they require modules and we have capacity available. So what happens is, we do not have dependencies on one single customer or a few customers, 10 customers. They keep changing the customers, but the concentration will remain, because that is the key part of and the strength of the business.
All right, but for this, Finance Minister Nirmala Sitharaman has shared the government's larger goal of Viksit Bharat by 2047. She says that it is anchored on 5 pillars: economic, social, technological, strategic and environmental self-reliance. She added that Atmanirbhar Bharat is resilient and globally integrated. Finance Minister Nirmala Sitharaman sounded bullish on the Indian economy at the 12th SBI Banking and Economics Conclave 2025, saying that the people of India have responded to the GST reforms and the economy is bringing out the best. Apart from F&O, Finance Minister Sitharaman also commented on PSU Bank's consolidation, saying that the work has begun on the next phase. Let's go across and listen in.
मैम, जिस तरह से आज आपने पूरे अपनी स्पीच में कंजम्पशन की बात की है और फोकस भी रहा है जीएसटी रिफॉर्म्स के जरिए कंजम्पशन को बढ़ावा देना, लेकिन एक मुद्दा, क्योंकि आप जमीन से चीजों को समझती है, लोगों से मिलकर करके, लेकिन जो एक 2 से 3 लाख करोड़ रुपए तक का इकोनॉमी में नुकसान हो रहा है एफएनओ निवेश से जरिए, इसमें कई सारे छोटे निवेशक भी अपना पैसा गंवा रहे हैं, कई सारे ऐसे मामले आए जिसमें घर के घर बर्बाद हो गए हैं। तो क्या ये चीज आपके संज्ञान में है, क्योंकि ये पैसा कंजम्पशन में आ सकता है, इकोनॉमी को बूस्ट दे सकता है, और सेबी की रिपोर्ट भी बता रही है कि 93% लोग हैं अपना पैसा गंवा रहे हैं। सेबी ने एक मामले में जांच भी करी कि एक विदेशी फर्म जो है वो हजारों करोड़ रुपए का मैनिपुलेशन के जरिए कमाई कर गई। तो क्या आपके संज्ञान में ये सब कुछ है, और ये बड़ा पैसा कंजम्पशन में आके जो सरकार का मकसद है, जो आपका मकसद है, उसको और आगे बढ़ाया जा सकता है?
संज्ञान में है, मगर उस पैसा को कुछ और रास्ता में लेके जाना मेरा इरादा नहीं है। जिस रास्ता में वो जाना चाहते हैं वो उनका मर्जी। सरकार रास्ता बदलने के लिए नहीं, मगर उस रास्ते में जिस तरह के नुकसान हो सकता है, जो आप विस्तार से बात कर रहे हैं उसके ऊपर, उसको अवेयरनेस के द्वारा बातें करेंगे या प्रोग्राम करेंगे, गांव-गांव तक जाकर बोलेंगे, भैया संभालो, आपको इतना नुकसान होगा, वो सब कर सकते हैं। मगर वो रास्ता किस रूट में जाना है वो बोलने का मेरा अधिकार नहीं बनता, ऐसे मैं समझती हूं, क्योंकि पैसा उनका है, संभालना भी उनका ही होता है। हम संज्ञान में लेते हैं और उसके लिए कुछ अवेयरनेस की तरह काम कर सकते हैं। उससे ज्यादा अभी कुछ मेरे पास आइडिया नहीं है। अगर आपके पास है तो प्लीज भेजिए, मैं एक्ट करने के लिए तैयार हूं। India needs a lot of big banks, world-class banks, and for that, of course, we will have to sit and talk with the Reserve Bank and also with the banks themselves to see how they want to take it forward, and also discuss with RBI about how they have a idea of taking or idea of building larger banks. So there's a lot of work to do prior to my saying, yes, I've taken a call or government is looking at this way or that way. And in that, work has already commenced. We are discussing with RBI, we are discussing with banks. It's not by creating from among those which exist today, just the amalgamation. That can also be one of the route. But you need an ecosystem and also an environment in which more banks can operate and operate to grow.
All right, moving on, and at the SBI conclave, SEBI Chairman Tuhin Kantapande talks about the streamlining the process for pledging shares of pre-IPO companies and rationalizing disclosure requirements in offer documents. Let's listen in to what he had to say.
For IPO-bound companies, the existing contents of the offer document summary will be further rationalized. This summary will also be made available separately to investor from the offer document to encourage informed feedback from them. The process for IPO-bound companies whose pre-IPO shares are pledged is being streamlined. The proposed framework will ensure that lock-in requirements are automatically enforced even if pledge is invoked or released, thereby preventing listing delays. Consultation papers for these proposals will be out soon.
All right, moving on to another story then, and as per sources, government is likely to announce next generation's customs reform in the upcoming budget. Finance Ministry holding discussions with industry and stakeholders on the new reform measures. Let me take it across to my colleague Prakash Priyadarshi, who joined with more details earlier. Prakash.
Well, this is going to be very crucial for the industry as the government is likely to announce next generation custom reforms in the upcoming budget. In fact, the work has begun on formulating next generation customs reforms, and sources indicate the Finance Ministry is holding consultations with the stakeholders on new reform measures. In fact, discussions are underway with industry and other stakeholders. In fact, the process will gather momentum after announcement by the Finance Minister regarding next generation customs reforms a few days ago. Sources indicate that the reform measures to include faster clearance with the greater transparency, measures related to streamlining operational systems, use of AI, and trade facilitation could be part of reform measures. Along with that, steps will be taken to support domestic manufacturing and modernize duty notifications. These measures will play a key role in complete overhauling of customs system in the country, and therefore the government has initiated the process to improve India's competitiveness in the global market by introducing next generation custom reforms.
All right, thank you so much, Prakash, for getting us these exclusive details. But the other story is about Bharti Airtel, wherein Singtel plans to sell 0.8% stake in Bharti Airtel via its Singapore unit in a block deal. JP Morgan will act as a sole broker of the deal. My colleague Anurag Joshi is here with the details. Anurag.
Pastel Limited, a unit of Singapore telecom firm Singtel, will sell a part of its equity in Bharti Airtel through a block deal tomorrow. The secondary deal trade is on November 7, and JP Morgan India Private Limited is the sole broker in the transaction. The transaction is happening at 2,030 rupees, and this is an about 3% discount to today's closing price. 51 million shares are being offered in the block deal, and this is 0.8% of the total outstanding equity shares of the company. So that translates to 10,350 crore rupees, which is almost $1.2 billion. And this is a totally secondary transaction, and this transaction is on the heels of a transaction in RBL Bank, where Mahindra & Mahindra sold a 3.5% equity stake, its entire equity stake in the private sector lender today through a similar block deal.
All right, thank you so much, Anurag, for getting us all those details. Put the spotlight on some of the earnings, and Apollo Hospitals did come out with its numbers, and seems like a very strong set this time around, where the numbers all across the boards were higher than what we were expecting at 80 now. Look at the jump in revenue. That has seen a surge of 13% on a YY basis. EBITDA shot up by 15%, while the margins have now expanded to 14.9%. Though the other matter of the fact is that in the next couple of years, the company's is targeting for a 25% margins. So that is a long-term growth target that they have set, but this time around the numbers were better than what the street was penciling in. 14.1% was the expectation. In terms of the profit, that too almost shot up 26% on a YY basis. Be it healthcare, be it the hospital division, be it the Apollo Health Co. All across the board, the company has performed better than what the street was penciling in. There's a continued focus on the margin improvement that we have seen, and digital health profitability as the 24/7 losses were seen to be narrowing, and all segments did sustain the double-digit growth this time around. And even the brokerages are seen to be liking the results. For now, Morgan Stanley has come out with a note where they maintain their overweight stance on Apollo Hospitals with a target price of 8,058 rupees, while they say that the overweight stance has been maintained because the numbers have been backed by consistent growth across the segment. So Apollo Hospitals, good set of numbers is what we have already seen. But in terms of the upcoming earnings, it's Bajaj Auto that will be in focus, slated to report its numbers today. And this time around, a resilient margin performance is what we are expecting. The margins are expected to be above that 20% mark for Bajaj Auto, while a double-digit growth, be it on the top line, bottom line, as well as the operational EBITDA performance is what we are expecting. In terms of the volume performance, yes, of course, it's been a 16% jump in the volumes. The export market did very well. The three-wheelers did very well, while in the domestic market, the motorcycle segment did perform well, not at par to the expectation, but along with that, it was the three-wheeler and the product mix overall that flared so very well for Bajaj Auto, and that is something that is expected to help the numbers this time around, help them maintain their margins this time, and let's watch out for that, because given the fact that we have numbers from TVS Motors, there we have seen a bit of a disappointment. So for Bajaj Auto as well, a steady set is what we are expecting. So margins will be the key to watch out for. But apart from that, the management commentary in some of the new product launches and the demand outlook for the domestic market after that GST rate rationalization is something that we will be watching out for. So let's watch out for Apollo Hospitals, maybe a positive reaction, while for Bajaj Auto, we are getting to see that the numbers will be out today, so watch out for that. But LIC did come out with its Q2 earnings, and the company's consolidated net profit has seen a significant jump on a YY basis. Let me take it across to my colleague Rabinder, who is here to tell us more details on LIC numbers. Rabinder.
Well, as LIC reported a strong set of number in Q2 FY26, and in this quarter, company's APE stood at 16,382 crore as compared to 16,465 crore year-on-year basis, and VNB has increased from 2,941 crore to 3,167 crore with an uptick of more than 7.5% year-on-year basis, and the company's VNB margins also showing good uptick of more than 145 basis point year-on-year basis, and in the first half of FY26, company's expense ratio has decreased from 140 to 146 basis point year-on-year basis. And if we talk about persistency ratio, then the persistency ratio on the premium basis for the 13 months stand at 75.29%, and for the 61 month it was at 63.81%. And if we talk about the persistency ratio on the policy basis, then for 13 month it has decreased from 67.23% to 63.36%, and management remain confident for the second half of FY26. They say that the second half of FY26 will show in volume, so will show a recovery, and the growth in policies sold showing substantial growth due to the new pricing and customer benefit resulting from the GST exemption, and companies aims to offset the non-availability of ITC through increased volume and operational efficiency. And brokerages has come out with a note after the strong set of result, and Goldman Sachs has maintained the neutral rating and hike target price rupees 955 as compared to earlier target price rupees 930. And Citi has also come out with a note while they have maintained the buy rating with target price rupees 1345. They say that the Q2 FY26 was operationally strong with sustained focus on product mix realignment alongside with improving segment margins, while business mix realignment is encouraging, and the market share stabilization is in individual APE will likely to be monitored for the re-rating or for the LIC, and they expect higher volumes which is driven by operating leverage, and improving quality of business should remain paramount to maintaining the current VNB trajectory. So back of the strong set of number and positive management commentary and the positive brokerage note, LIC can be in focus in today's trading session.
so much, Ravinder, for getting us all those details. But in some of the other upcoming earnings, strength will be in focus today. Let me take it across to Snehi, who is here to tell us what the street is really penciling in this time. Snehi.
Well, yes, so one of the Nifty companies coming out with its earnings later today is going to be Trent. Now, overall, we're expecting a decent set of numbers, not too bad, but nothing too good either. So, if you take a look at these numbers on a standalone year-on-year basis, in the quarter two update, the management had guided for the revenue from sales to be at around 5,002 crore rupees. The revenue that the street is penciling in is closer to 4,792 at least. So, what the management has guided in its update looks better than what the street was penciling in. But despite that, the trend that we have seen of revenue deceleration on a year-on-year basis, that will continue because we're seeing the revenue to go up only by about 18.8% this year, which according to Trend's past performance and Trend's history is slightly lower. EBITDA is seen at 781 crores, up about 22%. Net profit, we're penciling this number to be absolutely flat at 430 crores. This time last year that number was 423 crores, so not much uptick over there. Margins are expected to improve at 16.3% compared to 15.9%, a 40 bips improvement on a year-on-year basis. Now in their quarter two update, the management had said that they have opened 13 stores in Westside and 40 stores in Zudio for the quarter gone by. So key expectations are going to be that store additions are going to aid revenue this time around. Revenue per square feet on the flip side is expected to decline 13%. Area growth of 3% year on year in terms of total square feet that they have. Revenue growth will be lagging area growth this time around, and dividend income from the Inditex JV will be aiding their other income elements. So when the numbers do come out later today, watch out for SSSG growth, demand outlook from tier 2 and 3 cities and some other factors. But all in all, we're expecting a decent set of numbers from Trent for quarter two.
All right, thank you so much, Snehi, for getting us all those details. So let's watch out for that. But with this, we are completely timed out in this edition of Market Cafe. It's a goodbye from me and the entire team who put this show together. Thank you so much for tuning in.